Hello everyone and welcome to Investing Angles. Today the bond market made several unsettling moves, and this is going to be the main focus of our discussion today. What we are going to do is to discuss yields on multiple years, starting from 2 year and ending with 30 year. Then another big thing that we are going to evaluate today is the spread between 10 and 2 year yields. And also we'll touch point on Canadian market. We'll see how the 5 year yield is moving in Canada. After that, we will talk about more details about 10-year yield, Elliott wave perspective, and candlestick perspective, and we will end our discussion with TLT and the projections with Elliott waves and the candles. Let's begin. Before we start, make sure to hit the subscribe button in the right corner. This is the yield closure today of multiple years. So we have 2, 5, 10, 20, and 30-year yields. So what we are seeing here is kind of unsettling and concerning. First of all, this I'd like to bring this up. This is the 2-year yield, and it most likely formed a double top. If this is confirmed next week, then we are going to see quite a move here. So this would be the formation, and we would see that the rates will go like almost immediately to 4.4 or even higher, depending on the next formation that is going to be done here. This is the biggest concern right now. If we look at the 5-year yield, so they're slightly behind, but they also formed a tower bottom here, and this is a strong formation. And if we look at this one, this is the cross that is going to happen in the next couple of days. This is going to be a bullish cross, 100 over 200 daily moving averages, similar to what 10, 20, and 30 years have already recorded. And this is only the beginning. So the interesting thing, however, is that the pace of the rise of the 2-year is much higher than the one for 30 years. And this would have an implication on the spread. So what we are seeing here is this is the weekly candle with a weekly closure of the spread today, 10-year minus 2-year. And this is a very strong bearish formation called the tower top, and it's made on 7 candles. The chances for moving lower are fairly high at this moment, and this move would be supported technically. So we are seeing that right now we are just 20 basis points above the zero line. So there is a very good chance that yield turns negative. And what would be the implications? Let's have a look from a slightly different perspective. So this is Elliott waves that I charted back in January 18th. And this is what it means here. So it was potentially a bottom, and yield moved up higher and then pulled back, and now it is forming potentially or already maybe completed an ending diagonal for wave C here. And this is a non-overlapping diagonal, but the waves here, wave 1, wave 3, wave 5, they have more corrective qualities than the impulsive ones, and that's particularly the big concern about the wave A, which is clearly corrective here. So we might have an ABC, very strong and very ideal zigzag for this correction. And now if we are moving down here, and this would be the point of no return. Mark this line, minus 0.114%. So if the wave here crosses down before making a new higher high, well, the potential impulse upward will be broken, and from Elliott wave perspective, we will be seeing lower prices, potentially new lower low, which will be below 1.1%, and this would be a very interesting development. Now let's have a look at the smaller wave. So what we're seeing right now, this is a 4-hour chart, and an interesting story here that the wave right now is developing in a very impulsive manner. We have a very strong impulse down off the top, a bounce for wave 2 or B, and another impulse is developing right now downwards. So this is if it makes an ideal formation, then it would go below zero almost surely. And now the final one I'd like to show you here. This is a monthly chart for the spread. So if we see a move here and technically it breaks below the line that I just mentioned on a different chart, well, it will be confirmed a pennant or bearish flag, and for this type of flag, we would be considering these types of targets, and this would be somewhere. Okay, so now it's fairly scary numbers. This would be the most ideal target for the move like this, and if this happens, well, I don't even know. So let's have a look at the history. This is the all-time spread, and what we are seeing here. So these type of numbers were last seen in 1980s, 1981, when the spread went negative -2, which would align with this one. Well, let's see what happens. So the next step is just to check whether spread turns negative, then whether it breaks the support level at minus 0.114, and if it does, well, then the path down towards these lines will be open. What does it mean for economy? What does it mean for anything else? It's difficult to estimate and evaluate right now, but this is what the technical perspective, purely technical perspective. I doubt anybody would tell you this anywhere else, but this is what it is. This is our specialty. Now let's move on and have a look at the Canadian store. What candles are telling us? So I would say that candles disagree with the Bank of Canada decision about lowering rates, and this weekly candle, it's fairly strong one, and I would say it might be a reversal, like a big one. If we have a confirmation next week, we'll be looking for a rally, potentially a strong one. And if you look at the daily frame closure, this is potentially the rising three methods. We have a strong green candle, three smaller red ones within the body of the green one, and the minimally confirmed rising three methods. So the chances for the rally for next week for Canadian bond market for yields are significant. Let's now move on and have a look at the 10-year yield. What we are seeing here is that on the 12-hour frame, we have a fairly strong tower bottom and a move above the 100 periods moving average. So this is the strongest right now. The next one is this one. It's a daily closure. It's ended right at the 50 days moving average, and the chances right now are better for bulls. And if we look at the weekly frame failed to move to close below the previous week low, and this is considered a bullish formation, a soft bullish formation, but it needs a confirmation, obviously. But the chances of a reversal here are fairly strong, especially if we consider that the candle found support at this at the green line, which is a big support. Now let's move on and see what else is happening. Okay, so this is the big long-term chart that we made back in December 2022. Since then, we haven't changed a symbol here, and now everything is intact. What we know that yield formed a fairly strong impulse upward, and right now it consolidated for wave 2. Wave 2 could be longer, and we might see slightly lower prices or a horizontal move before wave 3 starts. And this is from the Elliott wave perspective, because if we have one impulse up, then we should have another comparable wave upward after consolidation. So this is the theory. Now let's evaluate the TLT. What we are seeing here, it's a TLT. TLT formed starting in the beginning of December. It formed a fairly strong impulse down, and since then, since the beginning of January, it's been forming a corrective wave, which breaks better into corrective fashion. And on Friday, we are seeing a fairly significant move downwards. So the potential flag here, bearish flag, could be complete, and if we see a confirmation in the next couple of days, particularly breaking below the lower boundary of this flag, then this would be our target for the next move. And let me mark it approximate prices. So it's going to be between 80 and 82. That's going to be the projection. However, it wouldn't be uncommon if TLT makes a slightly longer path and does something like this. So, for example, makes an ABC correction, a bigger one, and again, it will move down towards this target just a little slower. It will happen. Okay, and now let's have a look at the candles. From the candles perspective, this green doji today, technically it's a confirmation of a harami cross that happened on Thursday. This tiny cross, entirely within the body and within the range of the previous candle. So this is a confirmation, but I would like, obviously everyone would like to see a bigger red candle, but so far let's call it a soft one. So the chances for move down are fairly high at this moment. And for unfortunately we don't have any 2 or 3 day closure, so that we cannot read the momentum. And the weekly is right now kind of neutral doji, not doji, with no, small candle with very high and lower wicks. So this could be a trigger downward or upward. We'll see how the next week closes. And finally, some of you track the yield on TNX. And this is a very interesting closure today. The weekly candle closed exactly at the low of the previous week. So technically, from candles perspective, it is a bullish combination, and the chances for a move higher next week would be considerable. And if we look at the daily frame, technically we have a big red candle, then we have a smaller one, which is a bearish harami entirely within the body of this candle, and the green candle today is a confirmation of a bottom. Let's see how the next week starts. So today we covered quite a few concerning or unsettling events, particularly for the spread between 10 and 2-year yields. We heard about TLT, 10-year yield, and also had a look into Canadian market. Well, thank you very much for watching. Don't forget to subscribe to our channel and tune in for future videos. Thank you. and happy trading, everyone.